Can you afford a $1 million accountant? That can definitely be a thing, just not a good thing. And I'm not talking about accountants who make $1 million. I'm talking about someone who could cost your business $1 million. Because if you hire the wrong accountant, that's exactly what could potentially happen. If it sounds extreme, wait till I tell you the story later in this video. The difference between a good accountant and a bad one could be a difference between a prosperous, well-run company and a ruined opportunity. So in this video, let's start by looking at just how bad things can get with accountants, and after that, I'll show you 5 very simple ways to make sure something like that never happens to you. And by the way, I'm Alex. I've been in accounting and finance for over 15 years. I have top professional designations, and working with business owners just like you is what I do every day. First, just how bad can accounting mistakes really get? You probably know large financial scandals like Enron, Lehman Brothers, or any other big-name corporate fraud cases. If even the largest companies with armies of accountants and auditors can still get burned, where does that leave smaller businesses like you and me? The truth is, the smaller the business, the bigger the risk from one bad accountant. And in fact, that one accountant can be your entire finance department. So if you get a bad one, they could easily cost your company thousands if not millions. That's why let's forget those giant billion-dollar scandals and look at something that is much closer to home. About 10 years ago, a small manufacturing company, let's call it Company A, was looking for an accountant. And because they didn't have time, like most business owners, of course they ended up rushing the process. They picked somebody good enough with relevant experience and above-average communication skills. There was just one tiny issue. The company couldn't reach the previous employer to check references. Apparently, the previous company got dissolved, and the owner had left the country. Not a big deal, right? So the Company A ended up hiring the accountant, and things were pretty good at first. Within a year, the accountant became general manager, and they got full access to pretty much everything at the company. Bank accounts, billings, payments, financial statements, you name it. Now, fast forward 5 years and something really strange has happened. Imagine you need to pay a big important supplier, but your general manager is away. So you try to handle the payment yourself, but your transfer gets declined. You try calling the bank, but they tell you your account has been in deep overdraft for quite some time. Then you try getting into your bank account, and you can't, because only your manager has access. And after scrambling to find at least your bank statements, you notice a lot of weird charges, like $5,000 payments to Walmart. You confront your general manager as soon as you can, but they mumble something about bank errors and tell you not to worry. They will fix it. But because something feels really off, you start digging further and discover that your trusted manager has been funneling money to their personal accounts for years. And in total, they stole about $650,000 from you. And guess what? Remember the previous employer you couldn't reach for references before? They lost over $350,000 to that same person as well. Turned out, this was not an honest mistake. It was a calculated scam worth $1 million. The accountant got fired, yes, but they never faced criminal charges because that would make it so much more difficult to return the money. Recovering stolen funds is extremely difficult, if not impossible. So obviously, it's much better to prevent it. But how do you prevent problems like that? Well, the best protection, not surprisingly, is getting the right accountant in the first place. Thankfully, accounting problems of that magnitude don't happen very often. But even without outright stealing, a bad accountant can still damage your business a lot. But before we dive into solutions, let's quickly run through all the common pitfalls. Most accounting problems come down to just 4 key areas: communication, competence, services, and fees. Communication is critical for a good business relationship, or any relationship for that matter. And even the best accountants will be useless if they don't communicate well or consistently with you. Your business does not stop just because it's summer, unless you are in a snow business. Some accountants can also come across as blunt, entitled, or even rude. Maybe they mean well, but is that how you want your business partner to communicate with you? Because accountants are business partners. Responsiveness and politeness are 2 of my favorite traits in people, so I always prefer working with somebody who is polite, reachable, responsive, as well as open to my feedback. Speaking of feedback, please let me know if you like or dislike this video. And please be honest, seriously. My goal isn't just getting as many likes. I want these videos to keep getting better, and your feedback is super important. Competence is actually very simple. It means, does the person know their stuff? For example, if they don't know tax rules, you will be paying tax penalties. If they make constant mistakes in your books, your business decisions will suffer. But everybody makes mistakes, and accounting is actually one of the very error-prone fields. One study even found that nearly 60% of accountants make multiple mistakes every month. The right technology can reduce these errors by as much as 75%, but the real issue isn't the mistakes accountants make. It's how they handle them. Do they take responsibility and own the mistakes, or do they blame you for everything? When you hear the word accountant, what pops into your head? Big glasses, endless stacks of paper, always busy filing taxes, right? Maybe. Unless your accountant is Ben Affleck, of course. And lots of accountants are stuck in these outdated stereotypes. Filing taxes correctly is good. But if that's all they do, you're missing out big time. Leading accounting companies go way beyond taxes. As your business grows, there's payroll, bookkeeping, financial strategy, and dozens of daily decisions. Not all tasks are created equal. How you design your internal process and responsibilities matters a lot. It took us years to build the system and train the team, and that's what we specialize in. Imagine trying to figure everything out from scratch by yourself. No accountant knows everything, but the good ones will always try to help. Finally, let's talk money. Lots of accountants will attract you with super low fees, but the cheapest accountant will usually cost you more in the long run. They will cut corners and surprise you with hidden charges, or even offer such low quality support that you can do it better yourself by watching YouTube tutorials. Expensive doesn't always mean better either, and cost is subjective. But there is a reason higher quality products cost more: a phone, a car, or accounting support. By paying more, you would usually expect higher value. The trick is understanding the value, and simply ask questions to understand what exactly you're getting. What am I paying for? Good accountants want you to clearly understand their fees. Don't worry about asking questions. If somebody pushes back or gets irritated with your questions, trust me, they are not your accountant. Hourly billing is usually the worst. I recommend a clear, all-inclusive price that covers exactly what you need. Now, keeping these 4 categories in mind, let's talk about how you find the right accountant for your business. Up until now, we've talked about how choosing a bad accountant could cost your business big time. Fraud is obviously the nightmare scenario. But as we saw in the previous session, other issues can quickly spiral into massive headaches as well. And some business owners find the perfect accounting partner quickly, while others may suffer for longer. And by the way, if you had a bad experience with an accountant, please share it in the comments below. Your story could save someone else from falling into the same trap. How exactly do you avoid bad accountants? We recommend staying alert, which means asking, listening, evaluating, reviewing, and tracking. Let's now look at each one. First, ask questions. Lots of them. It doesn't really matter how you find your potential accountant, from Google search, your network, social media. Just keep asking them questions until you feel comfortable. When speaking with an accountant, a good place to start would be asking if they have experience in your industry. Some sectors have unique features that can mean the difference between getting the work done right, just okay, or completely wrong. You could also ask who will be your point of contact. One person, like an account manager, is ideal. But a revolving door of random faces every month? Not good at all. Here's a few other questions you could ask. How are you different from any other accounting firm out there? How quickly will you respond to my emails? How will you help my business grow? We've created a full guide on how to find a great accountant. It's absolutely free, has a lot of good questions to ask, red flags to watch for, and other useful information. The link is in the description. But if the accountant stumbles even on these basic questions, it's a huge red flag. Pay attention to how they answer your questions. Do you even enjoy talking with them? If conversations feel awkward, that's your intuition telling you something. Working with somebody friendly and responsive can make a huge difference. Communication, as we discussed before, is way too important to ignore even tiny red flags. And make sure you spend time evaluating carefully. Rushing decisions when it comes to accountants can end badly, as we've seen before. So take your time and do your research. Ask around your network, look for any information about the accountant online, and carefully read accountants' reviews, if you can find any, especially how they responded to the negative feedback. Replies to criticism can reveal more than 50 glowing 5-star reviews. If something feels off, trust yourself. A little caution today can save big headaches in the future. Next, review their rates and make sure you understand what you're paying. As we discussed before, cheap accountants will typically cost you way more down the line, but expensive doesn't always mean great either. Instead, I suggest aiming for maximum value per dollar spent. But first, clearly define what value means for you. Is it communication, type of support, industry-specific knowledge, or something else? Also, nowadays you will see 3 different types of fee structures: hourly rates, one-time flat fees, and subscriptions. Hourly rate is tricky because, ironically, it encourages slow work and makes you dread every phone call because you pay for it. Flat project-based pricing fits well into one-time tasks with clear outcomes like filing taxes or valuing the business or doing some financial projects. But subscriptions are absolute gold for ongoing support. They create consistency, transparency, and encourage ongoing business relationship, exactly what your business needs to thrive long-term. Whichever way you go, transparency is key, and asking questions, as I mentioned before, is always your best friend. Finally, I recommend tracking everything. You found your perfect accounting partner, and you think it's time to relax and let them handle everything, right? Well, maybe, but remember the fraud story? Even if your accounting partner is indeed reliable, I still recommend learning how to read your financial statements and understand your numbers, at least the basics. You can learn a lot about the business from your financials. Checking your numbers quarterly is good, but monthly might even be better, depending on your business. A major red flag to look out for: if your accountant hesitates explaining your numbers to you or blocks access to your own financial data or banks, watch out. That should never happen and can lead to significant problems down the line. In the upcoming video, I'll teach you how to read and analyze financial statements not to miss anything important. And it's actually much easier than you think. But for now, just remember to stay alert. In this video, we talked about how critical it is to have the right accountant by your side, and how expensive it can be if you don't. If you're looking for an accountant, don't forget to grab our free guide from our website to assist you. You can find the link in the description. Let me know in the comments below if there's a specific topic you'd like me to cover next. Thanks for watching, don't forget to subscribe, and see you next time.